Ladies and gentlemen of the crypto space, we're live on a Friday at 11:51 a.m. on May 28th, the end of the week, a heck of a week. Coming off the heels of last week, we had a nice bounce. I think the charts look fine. I think the charts look good. I think the market is healthy. I'm seeing capital inflow, not capital outflow. I made a tweet this morning mentioning if had a couple extra $1 billion, who wouldn't throw 100, $200 million on the centralized exchanges and stablecoins? And when the markets are bleeding, yeah, I'm just going to withdraw those stables. They show up in whale alerts. Maybe I'll burn some stables, and that'll just push the market down a little bit more. So you get those entries to engage with these markets, to handle these markets well. You have to think like the people that have a capacity to push the markets around. You could say manipulation, but it's just that's what capital is. Capital is powerful. They're able to move the markets merely by psyops, psychological operations, by inducing fear or taking advantage of greed. That's exactly what happened last week. The markets were greedy. They were long, overlong. And all it took was a capitulation event to trigger the depreciative cascade, which is something I've talked about with regard to shitcoins. And it happens with the big boys too. And that's exactly what happened last week. It was too greedy, and it caused the depreciative gas cascade. The leverage was completely um, uh, burnt out, and the weak hands were shaken, and it caused all that emotion. And we saw what played out. We had a massive rally since then, and we're going to go through the charts today. These charts look absolutely ridiculous. They are just ridiculous, in my opinion. Awesome. Um, but the whole point of today's stream, the title is excess trading is capital destructive. What do I mean by that? So going into last Wednesday, I had a large amount of cash because you're supposed to have more cash on the balance sheet as the markets have increased risk. So when we start to see this stuff get crazy again, you want cash as principal. I keep saying that cash on the balance sheet is a combination of principal and debt. So we model what we're doing based on a business, but we operate a little bit differently because of the volatility of the markets. So people in legacy finance say there's too much volatility in the crypto space. How do you handle it? Yeah, doing this for a long time now. And the combination of the business modeling with risk management, you're able to navigate this space very, very well. So I didn't do as well as I could have done last Wednesday. I will get another opportunity at this. We will have these types of conditions in the market again, and I will handle it better. I deployed cash too early, so when the market is hot, you're accumulating cash as principal on the balance sheet. In the market where it is right now, I have cash deployed. Principal is deployed, and I have it's like 28% cash right now is on the balance sheet in the form of debt. And that's where we are in the market, unless the market fails. So that's the risk consideration there. The market's not going to fail. And if it is, that's something that I am overwhelmingly capable of sleeping with at night, because that's the comfort level I have with the market. You're deploying your capital. The most important thing is you're able to sleep at night. So the cash on the balance sheet when the market is red hot helps you sleep at night because of the risk associated with events like last Wednesday. And now is the time for a bit of a different balance sheet approach. So 28% right now of my cash is deployed and is earning capital. The cash is deployed actually in a 1/2 long type implementation. So when the markets are a little bit risky, maybe you take the cash as debt and you're deploying it on Curve. Or an impermanent loss protected implementation, which is available on Ethereum. Obviously, I'm completely on Polygon at this point, so I'm very much craving impermanent loss protected positions so I can deploy assets and not have impermanent loss, which means I'm just market making and generating an income in that regard. But you could do that with Curve and Cash to the tune of 35, almost 40%, depending on market conditions. 1/2 long is I borrowed cash and I took half of it, converted it to ETH, and I have it in an ETH USDC LP position. So it's 1/2 long, generating literally 95% ROI at this point. So does anyone really think the bull run's over, or does anyone really think that Ethereum's not valuable and it's not going to appreciate? That's the risk consideration, and for me, I am comfortable with that. I'm able to sleep at night, and I have a time horizon that's months. Months. I'll check back in August, but these positions I have are quite comforting to me, considering where we are in the markets and what the charts look like. So let's dig in. Let's take a look at the charts and let's get a sense of what I think and how other folks feel in the commentary, and we can make assessments and discuss various ways we approach these markets. Excess trading is capital destructive. Put debt to work. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto. Non-custodial DeFi or nothing at all. Bam. Let's pop it over to the main screen and see who's in the stream. We guys are at it quick. Cinematic, what's up? Live W. Hi Noah, happy Friday. Thank you. I look forward to taking a couple of days off, spending it with the girls. Killers is in the house. Mario, nice I caught you live in living Noah. Good morning, mining. Sergio, Yellow Mellow. Um, Minding your business. What made you like Matic? So Matic had Aave and Curve launch, and then the capital flow started moving into Aave, which is critical mass liquidity. And there's just a psychological analysis with critical mass liquidity. From a developer perspective, they're like, "Ooh, I'm going to build DApps and tap that liquidity," and then the DApps are going to trigger the emotions of investors who are value allocators, and then they're going to start depositing on Aave. They're going to start borrowing and lending, and that is the foundation of a functional financial system as per status quo monetary infrastructure terms. When you're talking about how healthy the United States dollar is, you're really talking about M2 monetary velocity, how much money is moving. So when you lend and when you borrow, that's money creation in terms of double entry bookkeeping. You got a debt on the balance sheet of the bank, and you got a liability on the balance sheet of the debtor, of the person who borrowed the capital. So that actually creates money in terms of double entry accounting. And the same holds true for Ethereum L1, for BSC, and now for Polygon. So I was riding the footsteps of BSC and how it got to be where it is compared to the looking at the way Ethereum L1 played out. And Aave is a money market. Curve is a forex market. The AMMs are basically automated business enterprise, or facilitate people to engage in an automated business enterprise. And all these puzzle pieces are just contributing to extraordinary monetary velocity. And monetary velocity is a psychological incentive where the market presents opportunity. And when people smell opportunity, it draws in capital. So what are we seeing on Polygon? So Bitcoin was bottoming this morning, and it was dipping last night, broke out down overnight. But what did we see on Aave and Polygon Aave, both V2 on Ethereum and Polygon? Capital going up. What did we see on Sushi on Polygon? Capital going up. Curve on Polygon. Capital going up. There's no need for the capital to exit the space anymore because the capital works. Being a market maker is a business. There will always be speculators, and if it's my, it is my obligation to tap this business. Market making was a business on Wall Street long before crypto ever came on the scene, and now we could be a market maker automatically. Oh my God. So all we need to do is operate the balance sheet like a business, take on debt, add it to the balance sheet, create working capital, and deploy it in a market making operation. Incredible. So the debt is used to accumulate principal on the balance sheet. With more principal on the balance sheet, you're able to take on more debt, create more working capital. Incredible that in the crypto space, your principal is actually generating a revenue stream also. Since the principal is collateralizable, you're able to take on additional debt, which means more working capital, which generates more revenue, which you can add to your principal, and you can see how all of this literally is compounding principle. It's just compounding. So this is overwhelmingly not just a business. This is a savings technology. It's comparable to banking in many regards. Aave walks and talks like a bank. It is a bank. Curve walks and talks like a forex market. It is a forex market. Uh, so that was, I don't even remember what question I was answering. What made you like Maddox? So that was my answer to that question. Man, I go deep down the rabbit holes. Lewis, my man, is in the house. How are you, brother? I went on speculative trading binge for the crash. True. One, XCK, oil, perp. I accumulated 12K of losses, to your point on this stream. So I'm sorry to hear that. What I've learned is that I could have done better last Wednesday. I did okay, dollar denominated. And then the bounce, I was able to claw back to like a 30% portfolio dip. And now it's even better. But I have less coins. So what does that teach me? I don't need to trade. It's ridiculous. It's a waste of time. What's pertinent is more coin. And Kevin O'Leary said that you could get more coin. And it's not, he wasn't talking about dollars. He was talking about the crypto assets because over time, with the time horizon, the coin is going to go up in value. So that means your principal is going to go up in value. So there's really no need to be trading your principal. What I am refocusing on is, sure, you could rebalance your principal. So what happens over time is I end up folding older ideology into my new ideology. And there's something I've always said, that capital flows from underperforming assets to outperforming assets. And this is very applicable to your balance sheet and your principal assets. If you have an asset on your balance sheet that's outperforming, reallocate value from the underperforming asset to the outperforming. And this is a perfect example. No, it's not. I don't have Aave up. So Ethereum and Matic are outperforming Aave, and and that means I reallocated some of that capital to Ethereum and Matic, and Matic and Ethereum are both outperforming Bitcoin. So I reallocated some of that capital from Bitcoin over to Matic and Ethereum, and Matic is outperforming Ethereum. So Matic's outperforming everything. And if you're operating on the Polygon network, those are your four collateral assets. You got more collateral assets on Ethereum, Aave. And this is really all the assets I really care about. Because if you can't collateralize an asset, you can't execute a business operation. And that's what I've completely honed my entire focus in on. If I can't collateralize it, it means nothing to me. I can't do anything with it. It's useless to me for business enterprise. So what's nice on Polygon is these four assets are also market leaders. So they have decreased volatility and a bit more predictable price action. Whereas on Aave V2 on Ethereum, there's more assets and not all of them are market leaders. It's nice that they're collateralizable, but the assets that aren't market leaders are much more susceptible to volatility. In which case, you can keep them on the balance sheet, but you should obviously consider position sizing. And to be more risk considerate. And also, you have to be very conscious of the monetary policy, whether it's excessively inflationary, does it have enough deflationary pressures, so on and so forth. And you can also see a very interesting statistic on Aave in the total amount of capital that's available versus the total amount that's borrowed. And that's really velocity of the asset in monetary velocity terms. And that's meaningful, and that's supply and demand. If there's not a lot of borrowing, there's not a lot of demand. Albeit, if there's a large amount of capital, that means people are using it as an equity. Beats the pants off stocks. Who the hell calls stocks an equity? You can't freaking borrow anything against it. Anyway. Gia June's in the house. I know I'm thinking about buying some DOT, so it can't be collateralized right now. So that is true. DOT predates my business model methodology. I have a position in DOT and Cosmos as well. They have ridiculous narratives associated with them. DOT also has a huge amount of development activity. If you compare DOT to something like Cardano, DOT is significantly more advanced. If you compare Cosmos to like Cardano, Cosmos taps the China narrative and is being rolled out nationally in the Chinese National Blockchain Initiative. So that's food for thought for both those. Bear in mind, they're not collateralizable assets, so they don't really belong in the balance sheet, which means that if you hold them, they don't do anything for you for business. They're a speculative asset, which means just forget about them. Check back in 4 years. So non-collateralizable assets are not functional for business enterprise. More comparable to a stock at this point until you could actually take debt on them. And those are the types of assets that I'll check back in a couple of years. I have very small, relatively small positions in DOT, Cosmos, decent position in Bancor that I just keep compounding. It was nice with like 28 Gwei this morning. It was like $150 to compound. I had about 10 grand worth of interest accumulated for Bancor. That was very nice. But it's a very volatile asset because you can't take debt on it. But then again, Bancor has a VBNT, which is extraordinary. So it has an inbuilt debt system. Their monetary policy is extraordinary. It's just a very volatile asset, and that's historically the case. If you guys recall earlier in my stream career, uh, Bancor, Kyber Network, and Synthetics is what really kicked off all my success. And Bancor was hammered hard, and they've been around since like 2017 at this point. And Kyber has a burn component. They were one of the first to have a burn component. And man, Synthetics is still on the radar. That's some big stuff. So I have, I ended up getting out of my Synthetics at like. It was like 70, 80 cents. I wrote it from like 7 cents to 70 cents. Now it's like $20. But the point is, I still have my synthetics position because it's interest and it just keeps compounding and compounding and compounding. And nowadays, I think it's up to like 30, 40 grand, which is pretty cool because it was all free and just compounds, which means it's growing. Einstein said it's good, so I like it. And Gavin Wood is pretty cool. So yeah, that's good stuff. Hey Noah, Wave says 28th birthday tomorrow. Thank you for teaching me the thought processes at such a young age. I will tell the stories for ages to come. 28 deploying a business. That is really cool. I got 10 years on you, man. You got so much time. Can you imagine the crypto space in 10 years? God bless. You did good, my man. Mark, sup, bro? Just drop it in. Say you're the man. Thank you. I try and stay humble. I want to help. I think about this stuff all day for my own personal, selfish reasons. This is my business, not the prize for myself and my family. But you guys, what we built in the Discord, it's just such a really wonderful experience. And you all are doing it for the exact same reason I'm doing it. It's for ourselves and our family. But by sharing the experience together, we're able to grow and learn together and be better because we can do better. And me telling you guys what I learned from last week, I know you guys, it's not about doing what I do. We all have to define our own narrative. We have to find our own way and create our own path. And we all have to be able to sleep at night and manage our anxiety. And this is exactly why the stream topics are titled the way they are. You know, excess trading is capital destructive. I know a lot of folks are going to trade, but you'll experience it for yourselves, and then you'll remember me saying, maybe that's not the best way. Maybe there's a different way. Keep an eye on the amount of coins you have. So if you're trading a dip and you want to buy back when it's lower in price, you got to account for slippage. So keep an eye on the number of coins you have. It's about the coin number. I want to accumulate the coin because those are collateralizable assets. 6 trillion budget proposal for 2022. Yeah. I think, I don't want to get into macroeconomics at this point. Clearly, I have a lot of thoughts on it, and it's very contentious. There's still a lot of deflationists that that I very much appreciate. Excuse me. The deflationists are awesome, and we always have to keep an eye out for a macroeconomic event. Clearly, we literally had a microeconomic deflationary event last Wednesday, but man, still sick. But that's crazy. 6 trill is a massive number. Nick Mons, WMatic a Polygon pegged to the ERC20 version of Matic. WMatic is Matic. It's the same as WETH and ETH. The reason they do that is because Matic on Polygon is the same as ETH on Ethereum, used for gas. So in contracts, you push Ethereum. So you notice there's no approval process for Ethereum or Matic, but uh, you could pull WMatic and WETH. So it has to do with the push and pull, the way smart contracts are designed in EVM systems. Um, excuse me. Oy, it's been a rough week. Um, I asked because that would reduce impermanent loss in the Sushi WMatic F pool Polygon. Man, permanent loss is painful. Watch those 2, 3, 4%. Man, when this thing was red hot last week, I was doing like I had 20 grand worth of slippage, and I was firing off transactions, and I somehow I managed to not destroy an excess amount of capital. So I noticed this week in hindsight that I have a little bit less coin. It's not a devastating experience, but that slippage was just it's not worth it. I'm sorry, this very sick today. Um, can't emphasize enough. Capital going up. That's right, Gia June. Digiverse. I didn't know you work for Humble and Koinomi. I work for neither. I did a little bit of work for Koinomi at a time, and I have a consulting arrangement for Humble, which they contact me at their discretion. So I don't work for them. I work for myself. I take it you watch Kevin O'Leary's and Pomp's broadcast. That was a wonderful, wonderful conversation. And what's fascinating is when I watch them talk and I hear the way Kevin talks about this. Yeah, that's what I've been doing longer than he has. I've been doing this for the last year. So he's spot on. And I know the way he's thinking because I'm thinking it and I have been thinking it this entire time. And that is the reason he's in, of all persons, is because this is a viable business enterprise. Um, Greg, you rock Noah, learning more here than anywhere because of you. My guru is taking some of your advice. We are in a way better position now. You're very welcome. It's a pleasure and an honor. Paul, Good Friday. Is there any website that lists projects on Polygon? CoinGecko. There's a Polygon category section. Bobac's in the house. More likes. 51 people in the stream. 20 likes. We can do better. Lewis, any thoughts on Balancer? BAO TVL remains 2 bill plus, but it's still a relevant platform. So, sure, Balancer platform is a big deal. I'm not too interested in the token. You could argue that it's undervalued considering TVL. I can't collateralize it. I can't borrow against it. So it's useless to me. But what's very meaningful looking at the TVL is that capital is in the system. And that is representative of the health of the digital financial market. There's no reason for capital to leave anymore because what will happen is the market will be down, the market will be up, but the market making positions, the LP positions, will be there. And that means when people want to trade, they have capital to trade. There's liquidity. It's a business. So that's the only thing I'm looking at right now. As long as the capital and LP and broadly AMM positions keeps going up, that is the health of the market. And that is the growth of the market. And that is what is different between this. I don't even think this is a cycle anymore. Eyes on that. If you see capital outflow from Aave, and Compound, and the AMMs, TVLs, then it's time to reconsider some sort of cyclical process occurring. But as long as that capital is going up, you're talking about a financial system in all metaphoric regards. Synthetics is early. It has a bright future. I like synthetics. I've had it since 2020 at like 7 cents. Seven, no, 70 cents, and I wrote it to like $7, $8. Those were the numbers. Now it's at like 18. It was at 24. at one point. So, heck of an asset. If only trying to obtain more coin, how do you reallocate your BTC to ETH? You're not selling the BTC spot, you're shorting BTC futures. No, I don't do a futures. So on it's very convenient because you're able to trade Aave assets directly on 1inch from one to another. So clearly, it's a decent Ethereum balance. I got even 200 there. So you can literally sell whatever you want. So and you're able to move principal around. So this is a very effective way of reshuffling the portfolio without affecting your debt positions. You're able to retain your health factor and still shuffle your principal assets around. I figured that was a nice even number. So I like that. Um, there's something about the numbers in the portfolio that ring true. Like when you hit like 420 Ave, you're like, all right, I think that's a good number. Bobag, what happened with Bancor and Link? Lots of drama. Unknown. I like. Take care, Gia June. Um, I like Bancor and I like Link. You can't own everything you want to own. So I can't own Link. It's just not for me. Big tech, and it's the backbone of the entire DeFi space. It's meaningful. But it's just not something for my portfolio. I need the majors. I Bitcoin, Ethereum, Aave, and Matic currently until I see some sort of narrative shift that something else warrants to be a collateral asset. Maybe Polygon Aave launches another asset, and we start to see a large TVL and a large borrow rate, and we start to see the churn of capital lending and borrowing velocity, and that would warrant me including it on the balance sheet. So I look for the functional properties of the asset more so even than the platform, albeit they're incredible assets. So it's kind of a win-win with these the market leaders. You're welcome, Paul. Greg, is there such a thing as futures market in crypto? Of course, FTX and Binance have futures markets. You can short and long all you want. So anyone that says he can't short and long crypto, I just knows nothing about the crypto space. And I've seen a lot of old school legacy finance folks mention, yeah, you can't short the market. Yeah, you could throw $1 billion short on Bitcoin if you want. They'll support it. The exchanges will take your money. So I don't short, I don't long, I don't like derivatives. I don't have any time for that shit. I focus on a business. Kevin O'Leary style, boys and girls. Front, I front run Kevin. Kevin, if you ever watch me, mad respect. I was there first, brother. Cinematic Noah, I'm fully understanding your approach. It's gonna take time, and it's not something I don't expect people to fully understand what I'm talking about because I'm me, and everyone else is everyone else. Meaning, I will never fully understand your approach. We're all individuals, and we all will have different thoughts and ideologies and emotions and intentions and goals. So the whole point I always try and express is we're all developing our own story and our own path and our own narrative. And the most important thing we can do is share those stories and our thoughts, because that's how we get to the next step and make our thoughts better. And that's why the Discord forum is just the best place for me. You guys are invaluable to me. The things we talk about. It's an extraordinary experience. I'm so happy I pulled the plug and I started doing that, or put the plug in, or whatever metaphor you want to think of. um, so you buy a coin, provide liquidity in LP pool, and then take a loan out against it in Aave. Yeah, I have all my capital on Aave. Aave is a bank. So I reshuffle the principal assets depending on which is outperforming. So notice what I have up here. I'm measuring Bitcoin against the dollar. I got Matic against the dollar. I got Matic against BTC. I got Matic against Ethereum, and I got ETH against Bitcoin. And this allows me to reshuffle. So Ethereum is outperforming Bitcoin. Bitcoin is dipping against the dollar, but Ethereum is holding up. It's not depreciating against Bitcoin. So there's support. So Ethereum should be weighted heavier than Bitcoin. I don't have Aave up. It's underperforming everything. It still warrants to be on the portfolio respecting the position size because of the narrative. Heck, it's the damn bank that I'm operating on. Matic is outperforming Ethereum. Check. Matic is outperforming Bitcoin. Check. Matic is outperforming the dollar. It's looks like a fat inverse head and shoulders at this point, which is extraordinary. And it is a little. It's more of a. It has a bearish posture to a symmetrical triangle in many regards, but that's besides the point. What's most pertinent is these charts indicate to me the principal balance should be skewed towards Matic. Ethereum should be skewed higher than Bitcoin, and clearly all three should be skewed higher than Aave. So Aave is probably about 10% of the portfolio at this point, a little less, probably 8%. But more Ethereum than Bitcoin, and more Matic than Ethereum. That's literally just based on chart data. Now, this is the biggest symmetrical triangle I have ever seen. I think this is the biggest symmetrical triangle that anyone's ever seen. And if you're considering that we're coming off bullish momentum of 25,000%, this might be the biggest bull flag in the history of any market there is. And if you think about the narrative for it and what it has been doing, and the fact that it's actually dealing with a financial system and monetary velocity, I think this warrants the bullishness. Um, there's always doubts, there's always fears, but just eyes on the monetary velocity, eyes on the amount of principal that's in Aave on Polygon, and eyes on disruption of the narrative. That's why I was talking about Arbitrum. That's why I talk about optimism. But I see more synergy than disruption. I see them all working together. I mean, look, you got this hop exchange that's going to be 1.5 minutes to get assets on and off of Polygon. This changes everything. This summer is going to be an absolute firestorm of L2 roll up, side chains, and seamless interrupt. Red is just throwing collateral all over Phantom and Polygon at this point. You know, my eyes are really on Phantom. You know, if it hits critical mass liquidity, I'm going to allocate capital and I'll get it over there. The fact that Bitcoin can now be just thrown on the Phantom through RenVM, that's a big deal. But it just has curve. It has a forex market. It needs Aave. It needs the money market. It needs the capacity to lend and borrow. It needs the banking infrastructure to operate the business enterprise. That was my answer to that question, Cinematic. What do you do with the loan you take out from Aave? Okay, it depends on market conditions. So if the market conditions are red hot, and we're talking about like last Monday, when 2 days before the crash, cash. I'll borrow cash and I'll put it into the forex market. And I'm earning 30, 40% on my cash. Literally my debt, I'm earning 30 to 40% when the debt costs like 3, 4%. And top it all off, this debt is incentivized for this period. I think it's going to be incentivized for a fair amount more time. So literally the debt is free. So if you're borrowing at 3% and you're getting 5% incentives to borrow the debt, it's a free debt position. To top it all off, you get 40% on the debt, throwing it into a forex market. So when the market's hot, you want to minimize your risk. Your risk-adjusted returns come from deploying the debt in the same form of the debt. So if you take cash and deploy it on the curve, it's still cash. You can take the cash out of curve and repay the debt. There's no opportunity for loss. With impermanent loss protected positions, you could do the same with assets. You can borrow Matic, deploy it to a single-sided LP position, and it's single-sided. You can take the assets out and repay the debt. There's no opportunity for loss. So right now, that's why I'm 1/2 long, because I borrowed cash. I converted half of it to Ethereum for an Ethereum USDC LP position. So it's down right now. So I'm down like $8,000, and the market's cyclical. So whatever, it's no big deal. I'll hold it for a while. To the tune of 95% yield. Okay, and to top it all off, the debt is free because I'm paying 3.5%. I'm getting 5% interest on the debt, just at the money market level. Not even considering where the debt is being deployed. So I expect Ethereum to outperform the dollar, which means the debt is going to grow faster than what I owe, the working capital, the debt being put to work as working capital, is going to grow faster than the debt that I owe. To top it all off, we get the yield on the debt and the incentive to borrow the debt. Yeah, this market is ridiculous. This is the most incredible business opportunity I've ever seen. That's the biggest thing. This has nothing to do with buying low and selling high. This is the most incredible entrepreneurial business opportunity I have ever seen in my entire life. And I've had a couple of entrepreneurial ideas. I used to build apps on the Play Store. I built 34 plus apps on the Play Store over the years. You Google me, you'll see the old apps. I built my first Android app in 2009. I wrote one of the first 100 Android apps on the was it the Android App Store. Was that called that? It was the little green App Store icon back in the day before it was the Play Store. And it was a port from a BlackBerry app. I was one of the original Android developers. Go figure. So I've had my entrepreneurial tendencies, so I know a good opportunity when I see it. This is the most incredible business enterprise opportunity I've ever seen. Have you used Mixed X yet? I have not, but I have it up, and my eyes are on it. So here's the kicker. I'm more interested in platforms and their functionality than I am about assets. So when I get excited about Mist, I'm like, sure, yeah, I want to use the platform. I have a tiny little position in Mist, Hail Mary, it goes 100x on the money. I'm not going to complain, but I'm not going to take a risk on it. You can't borrow against it. You can't collateralize it. It has no business on a balance sheet. It has no function on the balance sheet. So it's one of those risk plays. Goes 100x, I'm not going to complain. Goes to zero, I probably won't even remember that I have it. So, like 90% of the portfolio is in four assets at this point, executing an entrepreneurial business enterprise. Cinematic, wow, this is unreal. That you're very welcome. It's a big departure from the way new entrants to the space think of assets. I'm going to buy shares in Doge. What are you going to do when it goes to a dollar? You going to sell it for dollars? Then you sold your asset. What are you going to do with the money? You're going to spend the money, then you're back to square one and you're screwed all over again. This is business enterprise. It's the only way to create a sustainable source of revenue. Look at the markets differently. This is an incredible opportunity. Where do you have your LP for that ETH position? Sushi. 1/2 long. Now, bear in mind, be considerate. There's risk. If there's 2 years of depreciation for Ethereum ahead of us, I'm going to probably have a fair amount of losses, and I'll probably have to cut my losses at some point. So, y'all take your own risks. If you don't want to take the risk, borrow cash and throw it on Curve. And now you have a risk minimized debt position used as working capital. I tend to reserve that for when the market's hot. And I would like to remind everyone, when the market's hot, you want cash as principal on the balance sheet, not just debt. Cash on the balance sheet is a combination of principal and debt used for purposes of working capital. But when the market's hot, you want cash on the balance sheet in addition to your assets. Cash is just an asset. There's literally no difference having stables on your balance sheet as compared to Bitcoin. It's just another asset. No difference. So consider your risks. You need to reduce your anxiety, trade less, need to be able to sleep at night, rebalance value from underperforming assets to outperforming assets. So don't think of it as trading, think of it as rebalancing at opportune times. You got to follow the different charts, denominate varyingly. You notice I'm denominating Matic against USDT, Bitcoin, and Ethereum to get a sense of what is outperforming what. This chart is a ridiculous chart. All right, let's wrap this up. Bond F2 Polygon collateralized on Aave, LP on Sushi sounds like one of the best deals right now. Bear in mind, Sushi is double-sided pool, so there's impermanent loss there, and that's food for thought if something starts to depreciate. So my risk considerate or the risk considerate play is to borrow cash and put it on curve. And then it's just a traditional cash and carry trade where if your interest is 3% and you earn 30%, your net is 27%, which is extraordinary. And if the interest spikes on the cash, is one is probably transitory. Two, you just take the cash out of curve and repay the debt. So there's very little risk in a cash and carry trade. If you're doing what I'm doing right now, there's risk of impermanent loss to the downside, but it's half long. So if Ethereum rips to the upside, I'm going to get half of the appreciation because I'm going to experience permanent loss, but it's still going to appreciate. It's a cash grab. That's basically the bet. But it's when so the derivatives market is what triggered last week's events, but those people doing 20, 30, 40, 50x. I'm doing one half x. That's so I'm very risk adverse. I missed eFishy. I just aped into Polycat last night. I think I like the platform, but I don't know about fishing quick. I wish I was getting paid in Matic. Yeah, I have absolutely zero interest in those assets. Quick, fine. I could stomach that, but absolutely zero interest whatsoever in Polycat, and I would never ever deploy capital to a platform like that. Question: where does the yield in crypto come from? These yields are incredible. The first, foremost, most important yield is transaction fees. Sustainable. You're the bank. You're providing the liquidity. You get a part of the action. So transaction fees are absolutely sustainable. Two, incentives. Incentives either come from treasury or they come from monetary policy. And both are monetary policy is arguably a sustainable incentive comparable to modern monetary theory, MMT type principles. And the most successful monetary policy in the crypto space is Curve, which is starting to be replicated to other platforms as well. It's hyperinflationary coupled with hyperdeflationary properties. And it has been empirically proven to be one of the most successful monetary policies in the entire DeFi space. So those are the two sources of yield: base APY from transaction fees, and the incentives either from treasury or monetary policy. The yields are extraordinary. You know why? Because these are the yields the bank gets. And in the DeFi space, you're the bank. Instead of the bank taking your money and making the money, you're using your money to be the bank. Screw them. They've been fucking us for years. Um, But I'm going to answer all your questions, so I'm going to keep going. Yes, cash LP sounds good, but 100% sounds better than 20% APY. Okay, so that is exactly why I did what I did. Now, bear in mind, there's risk. I'm down like 8 grand on the position, but I have no intention of liquidating anytime soon. I expect Ethereum to outperform the dollar in the next 3 months. So over that time period, I'm getting 100% on my debt. And to top it all off, the debt is generating 5% in interest alone, incentivized to borrow it, and I'm only paying 3% uh, as a carry cost. So literally, I'm netting 2% just for borrowing the capital, and another 100% for putting it to work. And in the next 3 months, the Ethereum is probably going to outperform the market. In which case, that's also a cash grab, one half long. Um, Not that I advocate risk, but that is the risk that I am choosing to take currently. So completely trading fees and dilution. Um, well, that's another story. I won't get into it because as liquidity fills these LP positions, incentivized returns will be diluted. And in a bear market, I often think about how these what kind of yields we could expect, and I would expect actually the base APYs to go up and the incentives to go down because of dilution. Maybe that's where your thought is heading. Cash LP sounds good. I handle that next month. Cinematic. Yep. You see, look, Zach's answering questions. This is exactly what happens in Discord. Got great community and everyone's helping everyone. I love it. Is this current market? Where do you like to keep your health factor? 2.6 and it dipped to 2.4 this morning. I'm over 2. I'm not taking any risk with my money. Over 2 for me. Wow, thank you, Noah. It finally clicked in my mind. You have a good one. All right, let's wrap it up. 12:35 on a Friday, May 28th. 48 people in the stream still hanging out. 22 likes. We can do better. some good topics today. Manage your risk. All assets should be working. Don't spread too thin. Focus on collateralizable assets for the vast majority of the portfolio. Risk assets, small percent of the portfolio. Hail Marys, it's all good. Throw around 1% here and there. It's basically like investing in startups and IPOs and whatnot. And that's it. Just keep your narrative iterating. Jump on the Discord. We got a great community. And tell everyone to subscribe. And as always, I wish everyone a wonderful weekend. I'll probably see you on Tuesday because Monday's a holiday. Y'all have a good one. See you then. Peace.